Most real estate investors have money. It's just never in the right place at the right time. What I'm about to show you is how one agent fixed that permanently. I'm Simone Madan, Life and Wealth Advisor, and this is Chris's story. Chris is 45 years young, a full-time agent, been doing it for a long time, knows his market, and owns a few investment properties on the side. One day he was doing a joint venture with another agent on an investment property. Good deal. Tight timeline. Needed capital fast. The deal itself was good, but the timeline was tight. The seller wanted proof of funds and wanted it quickly. Chris had money, but it wasn't all sitting in one place. He was moving money between accounts, waiting on transfers, watching cutoff times. All the normal stuff investors deal with. Day goes by, and then another. At one point, the other agent checked in on where things were at. Chris explained that he was good on funds. He was just waiting on things to clear. That's when the other agent mentioned something that stuck with him. He said he used to deal with the same thing, having money, but still having to wait on it. And that's why he started keeping a portion of his money in a life insurance policy that he could access when deals like this came up. That caught Chris off guard. Not because he didn't believe in it, but because he had never thought of life insurance that way. To him, life insurance was something you bought and forgot about, not something you actually used. So he started asking questions. How does that work? How do you get the money? Why not just keep it in the bank? What he learned was simple. The money could sit somewhere, grow, and still be accessible when timing mattered, without having to reshuffle everything. After the deal closed, he couldn't shake that idea of becoming his own bank. So he reached out to me and told me exactly what he wanted. And that's what we built. All right, so I'm going to show you what that actually looks like. We designed a 5-year funding plan. Chris chose to put $50,000 a year for a total of 5 years. That's the amount he was comfortable saving annually for this setup. So from age 45 to age 50, he's funding it with $50,000 a year. That's a total of $250,000. Now, when you look at an illustration like this, there's a few things I want you to focus on. The cash value. This is the money inside the policy that's actually going to be earning interest. When he puts money in, there are costs early on, and then the rest of the money flows into the cash value bucket, where it grows. Then we have the surrender value. This is the important one. This is the money that Chris can actually access. Think of it as his available balance. This money he can use if a deal shows up, if a partner needs capital, if timing matters. No penalties, no age restrictions, no taxes when he accesses it. Chris will also have a projected rate. This isn't a guaranteed rate. It's a portion based on how the policy is designed and historical performances. We're not assuming anything aggressive here. Just steady growth over time without market risk. So when you zoom out after 5 years, here's a simple picture. Chris' money is growing. It is accessible, and it isn't already spoken for. Instead of all of his money being locked inside properties, deals, or timelines, Chris now has a place where money can sit and be ready while it grows. Now here's the part that also mattered most to him. At age 50, Chris is no longer funding this policy. Nothing else goes in. He just lets it do what it's designed to do. When we fast forward to age 65, there's a meaningful amount of money sitting there. Okay? Not just a number, but as flexibility. He liked knowing that if the market slowed, if he wanted more, to be selective with deals, if he wanted to invest without pressure, he had options. Then he looked at age 70. Same story. The money is still there, it is still growing, and he still have access to it. For the first time, Chris didn't feel like every decision had to be tied to the next commission or the next deal. It wasn't about quitting real estate. It wasn't about being forced. And that's what this plan gave him. If you want to see what a setup like this looks like based on how you make money and how you move, book a call at the link below. It's one conversation, no pressure. I'll show you numbers like I showed Chris. Let's talk soon.